VTLs. What are they? VTLs, or valid trend lines, are straight lines drawn between consecutive troughs or peaks of a particular cycle, serving as a real-time tool to confirm the position of a cycle in its phase. Key aspects. VTLs are drawn by connecting two consecutive lows or highs of a particular cycle and projecting the line forward. When prices cross a VTL, it means a cycle of a greater magnitude has peaked, low VTL, or bottom, high VTL. VTLs are different from traditional trend lines in that there are specific rules that dictate how these are drawn and what the implications are for crossing them. Alright, so in this second video, I'm going to explain to you what VTLs are. And as I said in the previous video, VTLs are simply trend lines. If you're familiar with trend lines, it's just lines that are drawn in a price chart. The difference between any random trend line and a valid trend line, or a VTL for the cycles model, is that there are specific rules. This is what I said here. There's specific rules that dictate how these are drawn. In other words, you can't just connect any two random points in a price chart for a VTL. If you want to construct a VTL, you need to connect either two consecutive highs of the same cycle or two consecutive lows of the same cycle. Now, in the case of connecting two consecutive highs, we call that a high VTL because it's connecting highs. And when we're connecting two consecutive lows of any given cycle, we call that a low VTL. What does crossing a trend line mean in traditional cycle analysis? Well, it's up to interpretation. The difference between a traditional trend line and a valid trend line, or a VTL, is that crossing a VTL has very clear implications for cycle analysis. And specifically, when prices cross a VTL, it means that a turning point of a higher degree cycle from the one we're studying has taken place. Let me unpack that a bit. Let's say we're connecting two consecutive highs of an 80-day cycle. When that trend line is crossed, when prices cross above that trend line, it means that a 160-day cycle bottom has occurred. Likewise, if I connect two consecutive lows of an 80-day cycle with a straight line, and then prices cross below that line, what that means is that a 160-day cycle high has taken place. This is the strict definition of what crossing a VTL means. So unlike in traditional technical analysis, there are specific rules that govern how you draw a VTL, a valid trend line, and there's also specific implications when prices cross these trend lines. So let me show you an example of VTLs working in theory. Now, this is the same picture that I showed you in lesson 1 when I was showing you composite price action. So this is a theoretical market that I constructed using ideal cycles. Here's what I want you to know. The two red arrows are, let's say, a 40-day cycle. Okay? And the line that is connecting these two lows is a 40-day low VTL. Now observe the black arrow here. What happens after prices cross this trend line is prices fall. And this is what a VTL actually does for you. Let me explain. When prices cross below a 40-day low VTL, it means that an 80-day cycle, so the next degree cycle, has topped out. And you can see that it's exactly what happened here. So again, when prices cross below a low VTL, as I'm showing you in this example, it means that a high degree or a higher degree cycle has topped out. That's what it means. And this is why this tool is so powerful. Now let me show you VTLs in practice. This is Go in 2022. And the two blue arrows you see here, this one and this one, are highlighting two consecutive 80-day cycle highs. The green down trend line is an 80-day high VTL. It is simply a trend line drawn between two consecutive 80-day highs. And you can see that the moment gold prices crossed above this trend line, prices were generally going up. So this trend line told us when prices crossed above this trend line, we got a signal that a large degree cycle had bottomed out and the prices would likely rally. So what is the practical implication of crossing one of these VTLs, crossing one of these trend lines? It means that a large cycle has turned. There is a simple trading strategy here, which is to draw the 80-day cycle VTL, and when prices cross above it, you just buy that market. Why? Because a large cycle has made a bottom. This is what the VTL tells us. When prices cross a VTL, a large cycle has either made a bottom or a top. In this case, I'm showing you an example of a high VTL, which means I'm connecting two consecutive 80-day highs in this case. And when prices crossed above that trend line, I knew that somewhere in this area, a large degree cycle low. I don't necessarily have to know what the degree is. The specific definition is that when prices cross above a VTL, the next degree cycle has bottomed out. So the strict definition when gold prices crossed this VTL was that the 160-day cycle had made a low. However, I knew that based on the principle of synchronicity, if the 160-day cycle was making a bottom, then it was very likely that a 1 year, I think it was an 18-month cycle was also making a low in gold. And so that's what provides the buying opportunity. This is a great timing indicator. It is a great way to know what prices are likely to do in the future. And it's a very simple tool as well. If you understand how it works or how to draw these trend lines, these are extremely powerful tools. I'm not cherry picking when I showed you this picture here. VTLs are just that powerful. When prices cross a VTL, that is usually a very powerful signal. And in fact, I rely on these mostly for my forecasts. I rely on VTLs heavily because I know them to be extremely reliable. However, you cannot use them in isolation. Notice here, there's a blue moving average overlaying this price action here, and that is an 80-day cycle filter. So I'm using filters in conjunction with VTLs. I'm using filters to spot this cycle high and this cycle high. So the filter is telling me that these are 80-day cycle highs. All I do from there is connect these two highs, project the line forward, and wait for prices to cross above it. When prices cross above it, I know that a turning point of a large cycle has taken place. In this case, I'm drawing a high VTL, so when prices cross above it, it means that a cycle low of a greater magnitude than 80 days has taken place. In this example, I am showing you the same chart of gold, but now I'm showing you a low VTL. A low VTL, if you remember, is simply created by connecting two consecutive 80-day cycle lows. And I just draw a trend line that connects the two. Again, I'm using a filter to spot where the 80-day cycle lows are, and I just simply draw a line that connects those two lows and I project the line forward. When prices cross below that 80-day cycle VTL, I know that a top has taken place. Remember, there's an inverse relationship between the VTL or the name of the VTL and what it means. Specifically, if I draw a trend line that connects two lows and prices cross below it, what does that mean? It means I have a cycle high and the trend is likely over. When I draw a trend line that connects two highs and prices cross above that trend line, it means a low has taken place. And if there was a downtrend going into that low, that means that sell-off is over. Or in reverse, you could say, you could buy the market when a high VTL is crossed, and then you can sell it when the low VTL is crossed. That simple strategy is a perfectly valid trading strategy, which I have employed myself. So VTLs are super powerful. I strongly encourage you to become familiar with how they're drawn and what the implications are. As you progress through this course, it's gonna get a lot easier. If it sounds a bit confusing right now, that's okay. It's a new concept. But basically, these are very easy to draw. You're just connecting two consecutive highs or lows, and the implications for crossing these trend lines are very specific. In real life situations, we're gonna draw these VTLs to look for turning points that are at least a few years in duration. And the reason for that is because we're looking for trends that will last us a few months. In future lessons, I'm going to show you exactly how we do this. It's a combination of all the tools that I've shown you here. So that's going to do it. In the next video, I'm going to go back to the chart on Bitcoin that we discussed in the previous lesson, and I'm simply going to show you how you draw these in practice. It's pretty simple.